Thank you very much, Chris. Now, the public is being advised not to put money into a form of investment known as death bonds. The warning comes from the regulator, the Financial Services Authority, which says that many financial advisors have been selling such bonds to clients without advising them of the risks involved. More than £1 billion is currently tied up in these investments, as Maleen Saeed explains.
So what did you do in your French lesson at school today?
Looking for somewhere to invest his children's inheritance, in 2007 Nicholas Jones settled on a product offered by his local building society. Attracted by the rate on offer and its seemingly low-risk nature, he decided to put in £40,000.
They told me nothing about what this investment was. As far as I was aware, until very, very late in the day, I was simply investing in a fixed-term savings account with a building society.
What Nicholas had actually invested in is something known as death bonds. And the clue to what they are is in the name. They're formed when investors buy into funds which are a collection of life insurance policies bought from often very sick or elderly US citizens. And when they die, the fund ends up getting the full insurance payout. But the problem is, with medical advances, insured Americans often outlive expectations, and therefore these investments don't pay out as expected.
And it's the risk of this happening that's led the FSA to issue this warning. They say many financial advisors are failing to tell their clients about the probability of something going wrong.
What we are concerned about is that people are not understanding the nature of the product, the nature of the risk that they're taking on with this product, and that won't meet their expectations. That's what we're concerned about, and that's why we're stepping in at this stage to say that we don't want this market to continue growing. We don't want to see this product finding its way to retail investors in the UK.
Since the FSA issued its warning, a fund specialising in the product has suspended trading after its clients rushed to get their money out. The consumer group Which says people who are worried about their investments can take steps to try and get their money back.
Go and talk to your advisor and ask them to try and get you out of it. And if you do find that you can't get your money back and you think perhaps you were missold the product, then look about making a formal complaint to your advisor, and if you don't get the response there, take it on to the Financial Ombudsman Service.
For Nicholas, the FSA warning has come too late. Key Data, the firm that sold his building society, Norwich and Peterborough, the death bonds, collapsed in 2009, leaving him and thousands of others in a panic about their investments. Eventually, those who were missold the products were able to claim under the Financial Services Compensation Scheme. Norwich and Peterborough said earlier this year it would repay all its customers, leaving Nicholas confident about getting his children's money back. Maleen Saeed, BBC News.